Hello everyone. This is the pre-market report video for today, 22nd August 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Before seeing our regular pre-market stuff, I like to highlight this article which I read in the Business Standard website. Basically they said these 5 stocks such as MCX, Lupin, Tech Mahindra, Trend and Dr. Reddy's having the PCR ratio of above 1, and now because next week is the monthly expiry, they are saying this has the high probability upside potential. For example, in MCX case, the PCR ratio is 1.38 and as per Business Standard website, it got the potential of 8.8% increase. For reference, I will attach the link in the pin comment. So my question is, what do you guys think about it? Please let me know in the comment section. The rationale behind the Business Standard website claim is higher put option open interest possibly written by strong institution or by strong traders. Hence, they perceived that as the limited downside. But personally, I think it's a very high risk. I'm not buying the limited downside statement. 1.38 PCR is clearly in the greedy area. And also in contrast, if you see the September month PCR, it is just 0.606. So as I said, I don't know what I'm missing. Please let me know your thoughts in the comments. Just a disclaimer, please don't make investment decision based on this. It's just for my and viewers' educational purpose only. Now moving to our regular pre-market stuff. Last July month FOMC meeting minutes was released last night by Federal Reserve official website. The summary is mostly it's all already known stuff, like FOMC members were confident that the policy is restrictive enough and in the short term inflation expects to drop below 2%. However, the new but expected info is if the inflation cools down more means then the vast majority of members agreed to perform the interest rate cut. As I said, it is widely expected. This FOMC meeting minutes gave the affirmation for that statement. So before this FOMC meeting minutes release, US market was very volatile and consolidating. But once the minutes was released, the market became somewhat steady and mild positive. At the end, Dow Jones up by 0.14%, S&P 500 was up by 0.42% and Nasdaq increased 0.57%. Despite this positiveness, VIX also increased slightly and moved above 16. As we know, price increase with the VIX increase is the indication of long build-up. Let's see. In addition to above, last night there was another important macro was released, which is new to me. We know every month US government is releasing the payroll addition data for which market always react violently, which all we know. Apparently, then every 6 months, one in February and one in August, US Bureau of Labor Statistics is releasing the correction value to that monthly payroll addition. So this year for April 2023 to March 2024 period, as a correction, the total payroll employment data was lowered by around 8.2 lakh jobs. This is the highest correction ever done to the payroll data. So basically, US jobs market is not at all good as it seems. Again, this indeed favored the interest rate cut. But this is also the indication of demand reduction, which made the oil price to lower by 1%. At the time of this video, WTI crude trading near $72 per barrel and Brent crude trading around $76 per barrel. Then regarding Indian ADR, because of US market positiveness, both the IT stocks ADR increased above 1% and both banks ADR increased 0.6%. In contrast, yesterday in Indian market, Infosys, ICICI Bank and HDFC Bank all three closed flat to negative. Only Wipro closed positive only 0.5%, whereas the Wipro ADR increased near 1.5%. Hence, bank and IT both sector ADRs indicating the fresh positive opening. About GIFT Nifty, early morning today it closed at 24,896. Then equating with the yesterday spot market, it's indicating the gap up opening of 70 to 100 points. So those were the things happened last night in US market. Now let's move to the Indian market. First about ICICI Bank. I hope everyone remember this story. ICICI Bank wants to delist the ICICI securities from the Indian market. But that didn't go well with the minority shareholders like Quant Mutual Fund and some big investors. So they lodged the petition in the Indian Company Tribunal to stop the delisting process. That yesterday in the aftermarket hours, Indian Company Tribunal dismissed the objection and favored the ICICI Bank. Hence today, both ICICI Bank as well as ICICI securities will be on focus. Second, Zomato is acquiring the Paytm's ticketing business Ticket New for around 2000 crore rupees. At present in India, there are only two major players in this segment. One, Book My Show, which is owned by Reliance Industries. Then the second competitor is this Ticket New. And as per Zomato, because of this acquisition, they are expecting the non-core business revenue to increase 2 to 3 fold times, which appears very ambitious. But for now, both Zomato and Paytm together will be on focus today. Finally, about institutions. Still, FIIs were selling. Yesterday, the net sold shares worth approximately 800 crore rupees. However, DIs net bought shares worth approximately 3100 crore rupees. As a summary, US market closed positive because there was no surprise in the Fed FOMC meeting minutes. So, global momentum is okay. In line with that, GIFT Nifty and Indian ADR indicating 70 to 100 points gap up opening. However, again, yesterday also, Bank of America released a statement that because more Indian public now is opting for the higher yield investment, so increasing the credit to deposit ratio for the banks will be very challenging, but it seems market doesn't care. Anyway, moving on, as per stock open interest, PNB, Petronet, Naukri, SBI, Power Grid, Indigo and Ultra Cement got an increase in open interest with a negative close, indicates the short build-up. On the other hand, Ipeca Lab, Divi's Lab, SBI Life Insurance, Ashok Leyland and Jubilant Foods got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, before our market hours, Japanese manufacturing and service payment data is due. Then during our market hours, first at 10:30 am, India's manufacturing and service payment data. Then around 2 to 2:30 pm, all Europe, France and Germany's payment data are scheduled to release. Then after our market hours at 5 pm, RBI's meeting minutes is due, and in the night, US payment data, weekly jobs data and crude oil inventories are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened marginally negative and was traded range bound, and in the last couple of hours it gained strength, then closed above 24,700. Thus on the daily chart, Nifty formed a bullish candlestick pattern with a positive crossover in RSI and MACD momentum indicators. In addition, Nifty maintained a higher high and higher low formation for the fourth consecutive session. Furthermore, it also stayed above the middle band of the Bollinger Band, all indicating the continuation of positive momentum. Hence, Nifty is likely to hit the 24,850 to 24,950 zone soon, as long as it stays above 24,700, while 24,500 remains a crucial support zone. In case of Bank Nifty, it opened 140 points gap down and underperformed Nifty and closed at below 50,700. Thus, on the daily chart, Bank Nifty formed a doji candlestick pattern indicating indecisiveness among buyers and sellers, but managed to defend the 10-day exponential moving average 50,500. However, it failed to sustain above the 20-day and 50-day exponential moving average. So 50,500 is crucial for the upside momentum. As long as Bank Nifty holds 50,500 on a closing basis, it can bounce towards 51,000. Regarding the weekly options data, the maximum call option open interest was at 25,000 strike, followed by 24,800 and 25,500, with maximum new call option writing at 24,800 strike, followed by 25,000 and 25,100. On the put side, the maximum open interest was at 24,500 strike, followed by 24,700 and 24,300, with maximum new put option writing at 24,700 strike, followed by 24,500 and 24,400. Thus, from options data, immediate resistance is at 24,800, and above this level 25,000 is the next level to watch, with crucial support at 24,500. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.